The call that would have destroyed any other investor's career instead became George Soros's greatest teaching moment, because what he said at 3 a.m. in his pajamas revealed more about market psychology than most people learn in a lifetime. New York City, August 14th, 1997, 3:17 a.m. The penthouse apartment on East 79th Street is silent except for the hum of air conditioning fighting the summer heat. Central Park spreads out below the floor-to-ceiling windows, a dark expanse broken only by scattered streetlights. The city that never sleeps is finally sleeping, but financial markets never rest. Somewhere across the Pacific, currencies are dying. George Soros sleeps peacefully in his king-sized bed, white cotton pajamas, reading glasses on the nightstand next to a worn copy of Karl Popper's The Open Society. At 67, he's learned to compartmentalize. When the markets close in New York, his mind closes too. No point losing sleep over positions you can't change until morning. But tonight is different. Tonight, the Asian financial crisis is entering its deadliest phase. The bedside phone rings. Sharp, insistent. Soros doesn't startle. After 40 years of trading, he's conditioned to wake instantly, completely alert. His hand finds the phone on the second ring. This is George. The voice on the other end is shaking. Robert Johnson, head of Asian trading for Quantum Fund, 35 years old, Harvard MBA, normally unflappable. Tonight, he sounds like a man watching his career disintegrate in real time. George, I'm sorry to wake you, but we have a situation. A massive situation. Soros sits up slightly, reaches for his glasses. What's happening, Robert? It's spreading faster than we modeled. Thailand was just the beginning. The Malaysian ringgit is down 15% since yesterday's close. The Indonesian rupiah is in freefall. The Philippine peso just broke through every support level we identified. Soros says nothing. Processes. In the trading world, silence from George Soros is more terrifying than screaming. Robert continues, panic creeping into his voice. Sir, our positions. We're hemorrhaging money. The contagion models were wrong. This isn't contained to Thailand anymore. The whole region is collapsing simultaneously. Still silence from Soros. George, are you there? We're looking at losses in the hundreds of millions, maybe billions. The Asian crisis is destroying us. I need instructions. Do we cut positions? Do we hedge? Do we? But what Soros said next wasn't what anyone expected from a man losing billions. Robert, Soros says calmly, tell me something. When we positioned against the Thai baht in February, what did I tell you about contagion? Robert pauses, confused by the question. His boss is bleeding money and wants to discuss old conversations. You said that currency pegs create systemic risk, that when one breaks, others follow, because they're all defending the same lie. Good. And what did I say about the timeline? That it could happen slowly, then very quickly. That markets would test each peg individually until they found a pattern. Excellent memory. Now tell me, Robert, why are you surprised? The question hangs in the 3 a.m. silence. Through the phone, Soros can hear the chaos of the trading floor. Shouting, phone conversations in multiple languages, the constant ping of news alerts. His traders are watching their computer screens show red numbers that grow larger by the minute. I'm not sure I understand, George. Right at this moment, Soros revealed why he's different from every other trader alive. Robert, you're thinking like an accountant. You're counting losses. I want you to think like a scientist. What is this crisis teaching us about reflexivity theory? Robert's voice cracks slightly. George, with respect, we're losing billions. This isn't theoretical anymore. Everything is theoretical, Robert. That's the point. These aren't random losses. This is an experiment validating a hypothesis. The hypothesis that overvalued currencies supported by hot money inflows will collapse in sequence once investor confidence breaks. Soros gets out of bed, walks to the window. Manhattan glitters below, each light representing someone trying to sleep through what might be the largest financial crisis since 1929. The Malaysian ringgit is falling because Malaysia has the same structural problems as Thailand: current account deficit, property bubble, banks lending to politically connected cronies. The rupiah is falling because Indonesia has worse problems than both of them. This isn't contagion, Robert. This is revelation. But sir, our profit and loss is irrelevant. What matters is whether our analysis was correct. Were we right about the fundamental unsustainability of these currency pegs? Robert hesitates. Yes, but. No buts. Either we were right or wrong. If we were right, then these losses are temporary noise. If we were wrong, then we deserve to lose money for bad analysis. You won't believe what happened when Soros turned this disaster into the greatest teaching moment of his career. Robert, I want you to do something. Stop looking at the profit and loss screen. Look at the fundamentals screen. Tell me what you see. I see currencies falling, George. No, you don't. You see currencies finding their true value. For 6 months we've been saying the Thai baht was overvalued at 25 to the dollar. What's it trading at now? 38 to the dollar? So our analysis was correct. We said the Malaysian ringgit was overvalued at 2.5 to the dollar. Where is it now? 3.2. Correct again. The Indonesian rupiah we said was impossible at 2,400 to the dollar. Current level? 4,200? Robert, we're not losing money. The market is proving we were right. These currencies were living lies, supported by hot money and government intervention. What we're watching isn't destruction, it's price discovery. The phone goes quiet except for background trading floor noise. Robert is processing something his Harvard MBA program never prepared him for. A billionaire treating massive losses as confirmation of intellectual theory. But George, the human cost. Millions of people are losing their jobs, their savings. What you're about to hear next is the secret that made Soros legendary. Robert, that's exactly why this needed to happen. Every day these currency pegs continued. The eventual crash became worse. Thailand spent $30 billion defending an unsustainable baht, $30 billion that could have built schools, hospitals, infrastructure. Malaysia maintained an artificial exchange rate that subsidized imports for the wealthy, while making exports uncompetitive for workers. Indonesia propped up the rupiah to hide the massive foreign debt their cronies accumulated. Soros's voice becomes more intense, more passionate. This isn't about money anymore, this is about understanding. These governments were like doctors giving painkillers to cancer patients instead of chemotherapy. The pain goes away temporarily, but the disease gets worse. We didn't cause the cancer, Robert. We just stopped the painkillers from working. But sir, we're still facing massive losses. Are we? Let me ask you something different. If we're correct about the fundamental overvaluation of these currencies, and if we're correct about the unsustainability of these current account deficits, what should we be doing right now? Robert thinks for a moment. If the analysis is correct, we should be increasing our positions, not cutting them. Exactly. The market is giving us the opportunity to position at better levels. We said the Thai baht should be 35 to the dollar. It's now 38. We said the rupiah should be 4,000. It's now 4,200. If we were right about the direction, we should be thrilled about the speed. The most shocking part wasn't his calmness, it was what he did immediately after. Robert, I want you to do 3 things. First, call our risk management team. Tell them to calculate our maximum position sizes based on current volatility. Second, call our research team. I want updated fair value estimates for every Asian currency based on current fundamentals. Third, call our prime brokers. We may need additional credit lines. You want to increase our positions in the middle of a crisis? Robert, this isn't a crisis. This is an opportunity. The market is finally pricing these currencies correctly. We have 2 choices. We can panic and cut positions at exactly the wrong time, or we can trust our analysis and position for the inevitable recovery. Recovery? George, these markets are collapsing. No, Robert, these markets are correcting. There's a difference. Collapse implies something healthy is being destroyed. Correction means something overvalued is finding fair value. Soros walks back to his bed, sits on the edge. His voice becomes quieter, more professorial. Wait until you see how this 3 a.m. call became the greatest trading lesson ever recorded. Let me tell you what's going to happen over the next 18 months. These currencies will overshoot to the downside, just like they overshot to the upside. Fear will drive them below fair value, just like greed drove them above fair value. The IMF will come in with bailout packages that impose fiscal discipline these countries should have imposed years ago. Corrupt banks will be forced to close. Connected cronies will lose their subsidies. Real economic reform will finally become politically possible. And then, Robert, these economies will begin growing again. Not the artificial growth of asset bubbles and currency manipulation, but real growth based on competitive exports and sound fiscal policy. You want us to bet on that recovery? I want us to understand that recovery is inevitable once you stop fighting market forces. Robert, what did Karl Popper teach about falsifiable theories? Robert struggles with the philosophical turn. That theories must make predictions that can be proven wrong. Correct. Our theory predicted these currency crises. Our theory predicted they would spread through contagion. Our theory predicted the governments would fight reality until they ran out of reserves. So far, our theory has been validated at every step. Now, our theory predicts that once currencies reach fair value, and once structural reforms are implemented, these economies will recover stronger than before. If we're wrong, we'll lose money and know our theory was incomplete. If we're right, we'll make money and validate our understanding. Either way, we learn something valuable. Robert's voice has changed. The panic is gone, replaced by something like wonder. You're treating this like a laboratory experiment. All markets are laboratory experiments, Robert. The difference is that most people don't realize they're in the experiment. They think they're victims of random events. But markets aren't random. They follow psychological patterns. Boom, bust, recovery, repeat. These Asian tigers were in the boom phase for 15 years. Artificial boom based on hot money inflows and currency manipulation. Now they're in the bust phase. Necessary correction based on economic reality. Next comes recovery phase, based on competitive currencies and structural reform. We're not betting against these countries, Robert. We're betting on their ability to learn from this crisis and build stronger economies. The background noise from the trading floor has quieted. Other traders are listening to Robert's side of the conversation, realizing they're witnessing something extraordinary. George, I have to ask, how did you know to stay calm? How did you know this was validation rather than disaster? And that's when Soros said something that changed how everyone thinks about crisis management. Robert, I learned something during the Nazi occupation of Budapest. When the world is collapsing around you, you have two choices. You can panic and make emotional decisions that usually make things worse. Or you can step back, analyze the situation objectively, and look for opportunities that panic creates. In 1944, when the Nazis were rounding up Jews, my father didn't panic. He studied the situation, understood the patterns, positioned our family to survive. Not by fighting the overwhelming force, but by understanding how overwhelming forces create their own weaknesses. These currency crises are the same. Overwhelming force meets immovable object. Something has to give. The question is whether you understand which force is sustainable and which isn't. Governments can't print foreign currency reserves forever. They can't maintain artificial exchange rates forever. They can't subsidize corruption forever. But markets can stay irrational longer than most people can stay solvent. The key is having the conviction to wait for rationality to reassert itself. Robert is quiet for a long moment. Then, what do you need me to do? I need you to call our economists. Get updated models on fair value currency levels. I need you to call our political analysts. Find out which governments are most likely to implement real reforms versus cosmetic changes. I need you to call our trading counterparts in London and Hong Kong. Map out the best entry points for recovery positions. And Robert, I need you to remember that being right too early looks exactly like being wrong. The market will test our conviction. Other investors will call us crazy for positioning for recovery while currencies are still falling. But if we're right about the fundamentals, if we're right about the recovery, then this 3 a.m. phone call will be remembered as the moment Quantum Fund positioned for one of the greatest trades in financial history. 6 months later, Robert Johnson gets a very different phone call. Asian currencies have indeed overshot to the downside. The Thai baht reaches 56 to the dollar before recovering to 35. The Indonesian rupiah hits 16,000 before stabilizing at 8,000. Malaysia implements capital controls, then removes them when markets calm. Quantum Fund's recovery positions, entered during the depths of panic, generate returns that dwarf the initial crisis losses. More importantly, the structural reforms forced by the crisis create the foundation for sustained economic growth. Robert, now managing $1 billion Asian recovery fund, reflects on that 3 a.m. phone call. I called George expecting crisis management. Instead, I got a masterclass in thinking independently when everyone else is panicking. Years later, when the 2008 global financial crisis hits, Robert applies the lessons from that night. While other traders panic about bank failures and housing market collapse, he analyzes fundamentals, identifies oversold assets, positions for inevitable recovery. The 3 a.m. call becomes legendary in Quantum Fund's internal training programs. New traders study the transcript, learn how Soros transformed crisis into opportunity through analytical detachment and theoretical framework. But the real lesson isn't about making money during crisis, it's about maintaining intellectual integrity when emotions run high, about trusting analysis over instinct, about understanding that markets reward patience and punish panic. Soros later reflects, that night, Robert learned something every trader needs to know. Markets are psychological systems, not mechanical systems. They're driven by human emotions, fear, greed, hope, despair. If you understand the emotions, you can predict the cycles. The Asian crisis wasn't a random disaster. It was a predictable consequence of unsustainable policies. The only question was timing. Once it started, the pattern was inevitable. Robert called me, expecting emotional support. Instead, I gave him analytical framework, because in crisis, framework matters more than feelings. What happened at 3 a.m. wasn't just crisis management, it was crisis education, a master teacher using real-time market collapse to explain theoretical principles, a billionaire philosopher treating billions in losses as tuition for understanding human nature. The call that could have ended careers instead created them. Because sometimes the best education happens at 3 a.m. when billions are at stake and conventional wisdom is collapsing all around you. Sometimes the difference between disaster and opportunity is a single phone call to someone who understands that markets are laboratories, not casinos. Someone who sees patterns where others see chaos. Someone who can sleep peacefully at 3 a.m. because he knows that panic creates the best opportunities for those calm enough to recognize them.